Okay, in this video, I'm going to be talking about a swing trading strategy for Forex that I have been tracking data on for a while at this point. And I got to say, it is one of the most powerful trading strategies that I've ever collected data on. Like, it's one of the most powerful trading strategies that I have in the lab at the moment. It's just extremely, like, it's high probability, but it also presents you with good risk reward as well. And that's uncommon. It's uncommon to find a strategy that gives you good risk reward, but also at the same time is high probability. That doesn't happen very often. In this strategy, it has it. The strategy is just one part of the equation. Don't forget. I can give you the strategy on the platter like I've given strategies in the past on the platter, but it's up to you. Like, at the end of the day, it comes down to your discipline. It comes down to your patience to actually trade the strategy. And that's where most people fall off. It's not the strategy. It's just, even a lot of people watching this right now, they're going to watch this video. They're going to get pumped up after seeing the strategy. But then when they're going to go trade it in real time, you know, those inner demons are going to start talking to them. That discipline, that lack of discipline, that lack of patience, it's still going to interfere. So even though I'm giving you a strategy on a platter, a high probability strategy, you can't skip the inner work. You gotta get your psychology under control as well. It's very important. And one last thing before we get into the video, before we talk about the strategy, if you do enjoy the strategy and you feel like it's something that you want to see more content on in the future, if this video can get 1,000 likes, what I'm going to do is I'm going to keep you guys updated on this strategy. I'm going to keep posting reviews of whenever I see a setup, whenever I see a clean setup for this strategy that has everything that I talk about in this video, I will post it on the YouTube, on the public YouTube. I will post just like I do with trade reviews, I'll do that, but with this strategy. And I will keep posting reviews. And I will also post in the Forex, in my free Discord chat room. So I have a free Discord chat room. I already post my watch list every single morning in this chat room in the Forex trading section. Every single morning I post a free watch list in here. Doesn't cost you a dime to join this chat. It's 100% free. The link to that chat is in the video description. And if this can get 1,000 likes, this video, then I will also post that setup in here. Every single time I see a setup and it's presenting itself, I will post it in here so you can capitalize on it as well. Okay. So we're going to do reviews, and I'm going to do reviews on it. And I'm also going to post it in here for you guys so you can see the setup and you can see it actually before it happens real time and see it play out. So if that's something you'd be interested in, 1,000 likes, let's get it. All right. So we're starting here. Euro USD. Again, remember, this is a swing trading strategy. Step number one, what you want to see is in a bullish scenario, you want to see a swing low put in on the weekly chart. So again, on the weekly chart, you want to see a swing low put in. If it's a bearish scenario, then you want to see a swing high put in. You can see right here on Euro USD, we have our lowest low in the middle. See this right here? Look at my cursor. Lowest low in the middle, and you got a higher low on the left. You got a higher low on the right. Once that week closes, that's key as well. You want to see that week close. You want to see that third candle close. After that is closed and we're coming to a new week, you have a confirmed swing low level. Okay. Now what you want to do next is you want to mark the high of that third candle. See this right here? You want to mark the high of that third candle. Why? Because there is untapped liquidity right there. Buy side liquidity right there above that third candle high. Now what you're going to do next is you're going to go down to your daily chart. Remember, we have that high noted. That's our untapped liquidity on the weekly chart. So that's what you want to see. You want to see the swing low close, and then the very next week, here's what we want to see. We go down to the daily chart now, because now at this point we're starting a brand new week. We're on the daily chart. That was that previous week high. See right there? That high was made on Thursday of last week. Here's Friday, and now we enter a new week. See this? Look at my cursor. This is Monday. Remember the weekly level. We still have the untapped liquidity being above that third high. We have the confirmed swing point, and now we're coming into a new week. What you want to see next, coming into a new week, is you want to see that ICT Judas swing on the weekly range, because that's what you're doing. Remember, you're a swing trader. With this strategy, you're swing trading, and you're looking for that expansion on the weekly range. So think power of 3. What do we want to see at the beginning of the week here? We want to see that manipulation move. Okay? We want to see a manipulation move lower to take liquidity. That's step number one. Step number one is you want to see the swing point actually. So you want to see that weekly swing point put in. And then coming into the new week, you want to see a manipulation move lower to take lower liquidity. And you want to see, this is key, because sometimes it'll just open up a new week and pop that high. If that happens, that's not something you want to take. What you want to see is you want to see that high from the previous week left untapped. You want to see it left untapped. That's untapped liquidity. And then coming into the new weeks, right here we have Monday. See how Monday didn't tag that high? It's just untapped liquidity. And then we have Tuesday, we have this dip lower. This is your Judas swing on the weekly range. You have a move lower. A Judas swing is a fake run in the opposing direction of where price really intends on going, for the sole intention of taking liquidity to rebalance price action. So we take these sell stops and we rebalance this daily price action. This is that fake run. And we know this. Our bias coming into the week is bullish. We've already concluded that our bias is bullish coming into the week because we got that untapped liquidity. That is what we want to run. We already know what our profit target is. Like coming into the week, we already know what our profit target is. We already know what level we're targeting. That untapped liquidity. That's what we're targeting. And now, what you want to see at the beginning of the week is that Judas swing lower. That's what you see here on your USD. You can see you had this hard crack on Tuesday. It comes down and it sweeps these sell stops. Lowest low in the middle, 2-hour lows on the left and the right. That is a swing low. There are sell stops beneath that level. Sell stops beneath that level. See that? We sweep it. We sweep those sell stops. And that is a shift in market structure on the 4-hour chart. So you got to keep that in mind. That Judas swing at the beginning of the week did have a 4-hour shift lower. We got something right here. What do we got? We have a possible shift in market structure. Now, this is at Wednesday at this point. This is on Wednesday. By Wednesday New York session, the vast majority of the time, vast majority of the time, by Wednesday New York session, the manipulation on the weekly range is done. Like that fake run, which was right here, it's done. And usually by Wednesday, New York, price is starting to show its hand by that point. It's showing where it really wants to go. And that's displayed with a shift in market structure. That's what it is. So you have that original push lower, your Judas swing, takes lower liquidity. We still got that untapped weekly, that untapped liquidity being above that third weekly candle right there. That's untapped buy side. We have the Judas swing. We take sell stops. And by Wednesday, you know, when you get around midweek, it's usually that manipulation is done. It's taking those sell stops. It's rebalanced that price action. And now we see a shift in market structure right here. That's confirmation. That's confirmation right there. That's what you want to see. That's what you want to see. In this case, you would be good to just execute on the 4-hour chart because you already got what you want. Like, what else do you need? You took liquidity. Wait for liquidity or you'll be the liquidity. We waited for liquidity. It took that liquidity. After taking that liquidity, you get a shift in market structure. This is that shift in market structure. Why is it a shift in market structure? Because we broke this swing high right here. And it's not only a shift in market structure, it's a high probability shift in market structure because we got our fair value gap. We got a strong close above the swing point. We took liquidity. That's a high probability shift. For an entry, what do you want for an entry on this? Your best bet for an entry, and how I did it, was we wait for a discount marketplace within that impulse swing. So for your entry, this was our impulse swing. This is the shift in market structure. We're midweek. Price has basically shown its hand at this point. We still got this untapped liquidity serving up here as a draw. And now we have a shift in market structure. What we want next is we want a retracement into a discount marketplace within that impulse move. So we take our Fibonacci from the low to the high of that shift and we measure that price range. All right. It had another little spike. Let's adjust it. Right there. That's an entry. That's an entry right there. Because it pulled back below 50% equilibrium of that price range. See that? The second it pulls beneath 50% equilibrium with that price range, it's in a discount marketplace. A discount means cheap. It's in a cheap marketplace within that 4-hour range. So far, what have we concluded? We want to see that we want to see that swing low. We want to see that swing point on the weekly created. That's step number one. After that, we come into a new week. We want to see that Judas swing lower at the beginning of the week without tapping that third candle high if it's a swing low, or third candle low if it's a swing high level. So this is a weekly swing low. So we want to see that third candle high left untapped, and we want to see that Judas swing. So after we get that Judas swing lower, what do we want to see next? We want to see that shift in market structure. Usually by midweek, price has shown its hand and it's showing you where it wants to go at that point. So we take the liquidity and we get our shift in market structure. Do we want to be buying up here as it's ripping up? No, we want the best price we can get. We want a discount marketplace. So we measure our Fibonacci. We put our Fibonacci on there from high to low, and we measure it. We find 50% of that price range of the shift in market structure where it occurred. You want the fair value gap confirmation as well. That's crucial as well. Let me make that very clear. You don't get that fair value gap, you got no play. You want that fair value gap confirmation. That's your confirmation signal, because that shows it's a strong shift. So we get that fair value gap. We pull back into a discount. You could get an entry. You also could dial it in a little bit more, be more precise with it, and you could have waited on this bullish order block right here. See this down close candle right here? This is a 4-hour bullish order block of support. So you could have got even more precise with it and hit it right there. And I'm not saying you got to do it exactly like with the way that I collected data on it. I did a discount marketplace. Discount, it's valid. Has the fair value gap valid. But you can mess around with it, and maybe you just want to do optimal trade entry to minimize your risk a little bit more. It's already a fantastic risk reward, even if you do a discount. But maybe you want to do optimal trade entry. So put your Fibonacci on there to give you optimal trade entry. Optimal trade entry is 62% on the retracement. See that? Right there. Look at my cursor. It gave you optimal trade entry as well. 62% on that shift. So let's see what that would be. Because at this point, that's your trigger. You could get an entry at that point, because we're midway through the week at this point. We've already got the Judas swing. Price has shown its hand, shift in market structure, untapped liquidity. That's all you want at that point. You're set. That's a solid trade at that point. So let's say you got in at 62%. You got your entry right there. And let's say you put your stop, because your stop would be underneath of that swing point of the shift. That's how you would time it. And then your profit target would be that high up there. What would that be? That's 3-to-1 on that play. 3-to-1, and it's high probability. That's amazing. That is an amazing risk reward. You can trade it with this risk reward, even though it's a high probability strategy. You can be right way, way less than you're wrong, and still be profitable with the 3-to-1. Okay. Now, even if so that was with optimal trade entry. But even if you got a discount, what would that be? If just like say you got in when it entered a discount marketplace, what would it be on something like that? So say you got in right there. So you risk that low and so what would that be? 1.50, 1.53. That's still good risk reward. Still good risk reward. If you just got in like right on a discount marketplace, that's what it would be. So it's up to you. You can use optimal trade entry to minimize your risk a lot more. That's up to you how you want to do it. You'll get good results with both. You'll get good results with a discount. You'll get good results with optimal trade entry. But you'll miss some plays with optimal trade entry. Sometimes it'll just be too strong and it won't give you that 62%. If you're okay with that, then go for it. That's what you want to see. We pull back to a discount. We test that order block. And then what happens next? It trades up higher, and it takes out that upper buy side. That was your profit target. You lock in gains at that point. Okay, so you got in Thursday, and you would have been exiting on Monday. So you would be holding you'd actually be holding it for a little while. You'd be holding it over the weekend as well and targeting it that high. So you'd be holding it a few days. Like I said, this is a swing trading strategy mainly. Sometimes you'll have cases where you might hit quickly, but the vast majority of the time you're going to be holding for a couple days at least. Again, real quickly, we had that weekly swing low put in. See that? We had that third candle that had been left untapped, and then coming into a new week. We had our Judas swing lower. Coming into a new week, it had not tapped that. It had not cleaned out that buy side yet. It's untapped liquidity. That's what you want. That's what makes it so powerful. All right, don't try to stretch the rules either. Don't try to stretch the rules and say, oh, it just tapped it by 10 pips, 5 pips. Is it still good? Stick to the rules that I'm giving you. Untapped liquidity, completely untapped liquidity. And then it sells off, There's your Judas swing at the beginning of the week. Usually, and then by midweek, usually price has shown its hand. We get that shift in market structure midweek, pulls back into a discount, it attacks the high. All right, so now that we went over a bullish scenario, let's go over a bearish scenario because it's basically just flipped around. So we went over that Euro USD was a bullish scenario. This is a bearish scenario. So what you want to see with the bearish scenario is you just want to see a swing high put in on the weekly chart. You want to see it completely closed. So all three candles need to be closed. Okay. Highs high in the middle, two lower highs on the left and the right. And you go by the absolute high of the candle, not the body when you're finding the absolute high. This was the absolute high that was traded on this candle. The absolute high, and then the high on the low and the high on the right are lower than the absolute high in the middle. So it makes that a swing high level. And then we want to see that candle close. And coming to a new week, what do we want to see coming into the new week? We want to see that level right there. That low of that third candle. We want to see it left untapped. We don't want to see it just open up and come down and take it. That's not a valid setup at that point. It disqualifies it. We want to see that Judas swing first. We want to see that Judas swing at the beginning of the week. Remember, the beginning of the week is prime time for the Judas swing. And then usually by midweek, price is showing its hand. And like it's done with the manipulation, and it's achieved its goal of taking that upper liquidity, of rebalancing whatever price action, and it's shown its hand at that point, basically. So let's go to the daily chart now. So right here, you can see this is Friday. This just closed. We have that weekly swing point. And coming into a new week, what happens? We open up right here, and we immediately start trending up higher. That's your Judas swing. That's your Judas swing in process. Okay. So now this one's a little bit different than that Euro USD. Here's something to look, because whenever I was tracking the data, I didn't go lower than a 1 hour. So you use the weekly swing point, and for your confirmation signal, you have two options here. I use the 4 hour and the 1 hour for my confirmation signal. On Euro USD, we had the 4 hour confirmation signal because remember, we had a big bearish shift on Euro USD, and then we had that shift in market structure to the upside on the 4 hour, which gave confirmation. Now with this NCD CHF, it's a little bit different because the 4 hour market structure is already bearish. And whenever you have a scenario like this, where it's already bearish and it's kind of just a lethargic move higher within that range at the beginning of the week, that's still a Judas swing, that's still manipulation, but it's already bearish. We took out this high, but that's not an explosive move. That's just a stop run. All right, there's a difference between stop runs and market structure shift. This is just a stop run. So whenever you only have the 4 hour market structure where you want it and it's aligned with the direction that you're trading in, well, then you would go to the 1 hour for your confirmation signal. And even on that Euro USD, you could have went on the 1 hour as well. I'm not saying you can't, but my advice, take it on the highest time frame that you see the confirmation signal. You could have used the 1 hour on Euro USD again to minimize your risk a bit more if you wanted to, but here's what you would do. So here's Monday. So we got Sunday right here, we got Monday, and then right off the rip at the beginning of the week, look at my cursor, we have this push up. Let me actually rewind it a little bit. We have this push up at the beginning of the week. It looks extremely bullish at the moment. It's coming up, it's cracking these highs. When it takes out this high, what's it taking out? It's taking out buy side liquidity. This is the Judas swing in process, that early week Judas swing. And remember, we still have untapped liquidity right here, being that previous week low. That is untapped liquidity. And now we get this Judas swing. It's coming up higher. 4 hour market structure still bearish, and it's taking upper buy stop, so stop run. 1 hour market structure, when it's doing this, is completely bullish. So now we're on a 1 hour chart, and we're looking at this. It's operating within a bullish market structure right now. 4 hours bearish, 1 hour is bullish. And at this time, we're coming into Tuesday London session. And what do you know? Look at that right there. So we had that Monday Judas swing, and then also into early London session during Tuesday. And then we get that shift in market structure. That was your early week Judas swing right there. That entire leg higher to take out these upper buy stops was your Judas swing. And now, because remember, the 4 hour is still bearish. And now we got this 1 hour shift in market structure lower right here. We took upper buy stops, which is what you want to see. You took buy stops, and then you got that shift in market structure to the downside with fair value gap confirmation. That's what you want to see, because that's a high probability shift in market structure to the downside after taking liquidity. We still got this untapped weekly right here. That's going to be your profit target. You already know that. That's going to be your profit target. And now you got this shift in market structure on the lower time frame. That's confirmation. You can get an entry once it trades up into that level right there. you're in the play. You're in the play short at that point because that's a confirmation signal. All right. So again, we got a premium marketplace. It's valid. Once it trades up into a premium, it's valid. See how it trades above 50% of that price range? That's valid at that point for a entry. And I believe you even got optimal trade entry once more. So let's plot that on there for the individuals who want to use optimal trade entry. You got it. You got optimal trade entry as well. So let's see what the risk reward would be on this one. So you're shorting, remember, so you're betting against it. You're betting on lower prices. Your stop's going to be above the high of that impulse swing lower where the shift was created. And your profit target's going to be that previous week low, untapped sell side. Look at that. Look at how beautiful that is. Look at that. 3.75 risk reward on that play. It's phenomenal risk reward, but it's also aligned with the market structure. A big mistake that beginner traders make is they try to force their risk reward ratio on the chart. There's nothing wrong with having a good risk reward ratio like 3-to-1, 4-to-1 if it's aligned with the market structure. This is how you do it. This is a good way to do it, to get really good risk reward, but it's also at the same time aligned with the market structure because remember, you know exactly what's happening here. You know exactly what's playing out. You have all these things coming together. You have untapped liquidity being that weekly low. So you already know where the weekly is drawn to. You already know that you already know when that manipulation occurs. You already know when that Judah swing, that ICT Judah swing is going to occur, beginning of the week. You know it's going to come up and take that liquidity. And then after it takes that liquidity, you're looking for that. You're looking for price to show its hand. How does price show its hand? It shows its hand with a shift in market structure. You get that shift in market structure. Where do you want to get your entry? You want to get your entry and at least a premium, or of course you could use optimal trade entry as well. If you use optimal trade entry here, that's 3.75 risk reward. That's amazing. That's amazing risk reward. And what about if you just got in on in a premium? What would that be? So if you got in a premium, that's still 3-to-1 risk reward on the play. That's 3-to-1. 3-to-1 risk reward on that play. Even if you just got in on a premium marketplace. Risking that high, you risk the high of the impulse move where that shift happened, and your profit target is always going to be, with this strategy, your profit target is always going to be that low right here. Now, of course, you could even you can play around with this and you could just take profits right there. But I mean, I'm sharing with you the way that I have tested it. And with the way that I tested it, you're always going to target that previous week low. Because remember, this is a swing trading strategy. You're looking for that weekly range expansion, and that's going to be your PT. It's such a clear cut strategy, and it's just such simple rules. You already know, like beginning of the week, you already know what your profit target is going to be. And again, if price comes down at the beginning of the week and it takes out that, like if it was to come down and take out this low, like right off rip, well then it just wouldn't have a play. You would go to another pair. So you already know what your profit target is going to be. You know you're looking for that Judah swing at the beginning of the week. After the Judah swing is done, it's took up our buy stops. You're looking for that shift in market structure. Again, kind of think like ICT 2022 mentorship, but with the weekly range. You're looking for similar signatures, but displayed on the weekly range. So you're looking for that move higher to take up our liquidity, which is part of that strategy. You're taking up our buy stops, and then you're looking for that shift in market structure to the downside. It's like the same exact thing, but on a weekly range. But by utilizing like that weekly swing point, you have a clear profit target, a clear draw on liquidity to shoot for. And like you understand why price is doing what it's doing. You understand everything why it's doing. We have our draw, we have our Judah swing, we got our shift. Price is now showing its hand. You can now position yourself once it moves up into a premium, and then you can look for lower prices. Now, the next question is, okay, but I trade one pair, Mike. I'm gonna be sitting around forever. I'm gonna be sitting around forever waiting for this setup. Well, I didn't test this on one pair. All right, you're right. If you test it on one pair, I'm all for sitting on the sidelines being patient and wait for high quality setups. But with one pair with this strategy, you're pushing it. At that point, you're hardly even trading with just one pair with this strategy. So that's why I recommend with this particular strategy, look at all these pairs I got on my watch list. I like looking at multiple pairs. That's what works for me. And for this strategy, that's what works best. Because remember, you're looking for very specific criteria. You're looking for extremely high probability environments with very specific things happening. And this gives you more opportunities to have that scenario. You look at all these different pairs. You look at all these different Forex pairs. Because again, this is a strategy for Forex. That's what I tested it on. It's for Forex. That's how you want to do it with this strategy. And it's just a super simple swing trading strategy. It's like a super laid back type of style of trading. And it's just, I mean, it's just stupidly simple. Stupidly simple. Good risk reward, high probability. Now, the only question now is, do you have the discipline to actually trade it? For some of you, it might just not fit you. You might not like swing trading. Well, remember, price is fractal and the same signatures repeat on a lower time frame. So keep that in mind. And that's fine. Maybe swing trading just doesn't fit your strategy. You're a scalper. Cool. But some of you that are swing traders, you know that's what fits you. Maybe it's based on your job, what you do. This is just the easiest way to trade. Because yeah, if you got like a full-time job right now, then this is perfect for you. Perfect strategy for you. But again, strategy is just one component of it. That's just one component of it. That's a small part of it. I've shared strategies on the YouTube. I've shared multiple strategies on the YouTube. But if you don't have your mind right, again, if you don't have the discipline on point, you haven't developed the discipline, you don't got patience, you let those inner demons deter you to make you break your rules, well, then the strategy won't help you. If you don't get your mind right, nothing will help you. But I'm telling you, if you can exercise enough discipline, be patient, follow the rules, and you follow this strategy religiously, I think you'll do just fine. You'll do just fine. Any funded account that you want, you got it. Quit your job, you got it. Like, you could do it with this strategy. But again, the question is, do you get the discipline though? And that's the big piece of the puzzle. That's the biggest thing in trading is, do you get the discipline? Because without discipline, nothing will work. So again, if this video can get 1,000 likes, what I will do is I will continue to make videos on this particular strategy. Kind of like update videos, show you setups that are playing out and how you could have played it. I will also post these setups beforehand in the Discord chat, in the free Discord chat, so you guys can see it play out real time. And just, you can see it firsthand, just how good of a strategy it is. You'll be able to see it real time. So 1,000 likes. And also, if you enjoyed this video, make sure you subscribe to the channel, turn on notifications, and I will keep the content coming.